Hey everyone, me Kevin here. So I got a lot of hate yesterday for suggesting that it's a good idea to sell Ape, which I sold at $8.02, a screenshot on screen now, and instead bought AMC. And the reason for that becomes a little bit more clear when you hear my confrontation, or should I say debate, between myself and the other apes. I was thankfully let in by Tara Bull 808 on Twitter into her Twitter space yesterday and was able to discuss what's going on with my opinion about AMC and Ape on a Twitter space that had thousands of you listening. Now I want to make one thing absolutely crystal clear before we go into this. Ape is believed by many to be economically equivalent to AMC shares. And that's because of this particular chart that says they have the same economic equivalence. However, economic equivalence really only matters in the event that there are dividends, which we don't expect there to be dividends for years for AMC, or in the event of bankruptcy and liquidation, which obviously we are trying to avoid. So really, economic equivalence is not something that matters right now. Instead, what matters is that one day, Ape shares will be convertible to AMC shares. Even someone who suggests that there's a lot of misunderstanding going on between Ape and AMC, and someone who is actively shorting AMC and acknowledges this confusion, is going long on Ape solely because they believe that in the future Ape will become an AMC share.
Why would you rather have the preferred versus the original share? Why is one better than the other? Or you're just counting on them to close?
I'm counting on them to close. Okay. In effect, that I think they'll ultimately all be the same class.
But the danger here, folks, is very simple. It's this particular frequently asked question right here. If condition 1 does not occur, that is, are the shares of Ape convertible to AMC? And AMC replies and says, well, technically, yes, weird qualifier. But if both of the conditions don't occur, A, or number 1, the board proposes a vote to allow Ape shares to convert to AMC shares, and 2, the shareholders approve it, then there's no convertibility. And the board is under no obligation to actually authorize the convertibility of Ape to AMC. So even those who are playing arbitrage on Ape to get to AMC might never get that opportunity. Now, I hope it happens, and I also hope that in the meantime, Ape goes to the moon, because the more Ape goes to the moon, the more AMC gets to pay down its debt with no obligation to ever take the dilution of the Ape shares, and it makes AMC a better investment. But just know, if you're playing the arbitrage, looking at Ape going, okay, well, Ape is $7 or $7.50 and AMC's $10, they should be the same. You have a market discount that needs to be priced in for 2 massive problems. 1, it might never convert. And number 2, Ape can be diluted to the tune of an additional 4.5 billion shares. You'll learn more when you listen to the details in this debate that I have with the Apes. So folks, listen to my debate here and let's get into it.
Okay, perfect. Yeah, no, I have no misintent for anyone here. If anything, I worry that, I hate kind of being one of the front runners sometimes, at least what I feel in bringing up perspective or questions or concerns that I have, because sometimes it just makes it seem like, oh, here comes Mr. Fudd again. And the thing about me is I literally just sit in the studio and think to myself, oh my gosh, but what if this happens, right? And so here's my big concern to kind of simplify everything for the AMC folks here and the Ape folks here. We've all at this point seen the comparison between AMC preferred equity units and common stock chart. We've all seen that. The problem is, that chart actually sits under the umbrella of a very, very important phrase. And the very important phrase is in the SEC filing under FAQ question 3. Are the AMC preferred equity units convertible into common stock? If so, when? And the answer is, quote, technically, yes, the AMC preferred equity units can convert into common stock. Now, they give 2 conditions for that. And they say, in bold, italicized, and underlined. They don't want to get sued for this in the future, so they want to be crystal clear. This is the only thing in the filing that they bolded, underlined, and italicized. But only if, quote, 2 conditions. 1, the AMC board proposes an increase in the number of authorized shares. Number 2, then investors vote to approve. Obviously, we expect Ape shareholders would vote to approve, and there are 50% of them out of the combined total amount of shares. So it has a likely chance of passing unless every single one on the AMC side voted against it, which I expect is somewhat unlikely, but could happen. But the biggest thing is the AMC board has 100% control over whether or not there ever will be a vote in the future. And here's what folks are forgetting is that this conversion, even if it did happen, it does not need to happen at a one-to-one conversion. See, if in the future, after, as Matt has said, Ape gets diluted 27 different times, which I expect it will, I think they're going to fully blow through these next 4.5 billion shares as soon as they can to raise money for AMC, which is the point, to eradicate AMC's debt. Then what happens at that point is Ape might be worth $1 or 5 cents or 10 cents. And then maybe what you'll get is, hey, for every 100 units of Ape you have, you'll get 1 share of AMC. Oh, look, AMC share is gone, or AMC's debt is gone. Now, bottom line out of all of this, and I'll stop talking, bottom line out of all of this is it's really good for AMC because if Ape fails, it literally cost AMC nothing. Absolutely no cost to AMC other than some miscellaneous filing fees. Call it $100,000 or $200,000. Big deal. Maybe it's even 300 grand, whatever. That's nominal for this company. Now, what is the potential if Ape moons and it goes to say $20 and AMC is able to dilute the crap out of Ape right back down to 10 or 5 or $1? Well, they pay off all their debt and maybe they even raise another $5 billion and they build twice as many theaters and they partner with Dave & Buster's or they buy Dave & Buster's. I don't know. They can do anything they want. But the point is, Ape has absolutely no claim to actually be a common stock of AMC, that convertibility that everybody keeps referring to, unless the board actually proposes the vote. And until the board proposes the vote, you have nothing. And this is why I tweeted the CEO and said, hey, let us know if you actually intend to do this, which we know he's not going to reply to, because if you actually read the Q&A, they literally wrote, however, quote, we do not currently expect the AMC board to make such a proposal anytime soon. That's it.
So that's completely true. That's what I was posting out about the people reading the 8K filing. But I think there's one misconception that Adam Aaron can just dump 4.5 billion shares on the market. The only authorized shares out of the Treasury right now were 1 billion, which the 516.8 million were just issued as a dividend. So the remainder is all they have access to at the moment. I think they would have to have another vote to authorize more shares out of the Treasury.
Nope, not at all. No, nope, zero.
What he's saying doesn't even make sense. He said dilute to a cent. If there's only 5 billion shares even to be released, let alone it really only being 1 billion right now, at 5 billion, I'm pretty sure you would divide by 10. You wouldn't get 1 cent.
One thing everybody keep forgetting: dilution with Ape. Those additional Ape shares, they have their own votes. You're not diluting the vote. Those are additional shares that are going to be issued. They're not taking 500 Apes as it stands right now and diluting them into 600 or 700 million. There's additional shares that are being added, and those will come with their own vote. So right now you have 500 million Ape AMC. You have 100 Ape. If they dilute tomorrow, let's say they get 100 more Ape, meaning there'll be 600. There'll be 600 million Ape votes. Each vote is equal the same. So now you have 1.1 billion votes. So don't mix them up.
No one's disagreeing with that. The vote is not diluted. One vote is one vote. There's a bigger voting pool. I don't want to speak for me, Kevin, but I believe his entire point in this is that financially, one can be diluted, and then if you're throwing the Hail Mary of it getting converted back into the original, most likely that will never be proposed, even if the people want it, because why would the board ever offer that? So, but even let's say me, Kevin, and I are both completely 100% wrong on our thesis of AMC on a relative basis being a better bet than Ape. If we're completely wrong, what's the issue of just going all in on AMC? Like, what is lost in this scenario if we are wrong?
It's bad advice.
It is bad. It is bad advice. And if you don't mind, I had my hand up. I don't know if you had your hand up, but Kevin, you addressed the conditions and the reason for one of those conditions. And I'm not saying that this is the entire reason, but that board decision being part of that condition acts as a sentinel to prevent a hostile takeover, right? If Ape goes to the moon and we dump on the shorts or the market makers on Ape and they're left holding the bag, then the market makers can't vote to convert Ape over to AMC and take it over unless the board approves it. So that's part of the reason why you have to have that condition in place.
And I just want to say you went from asking a question to now you just stated you gave advice.
All right, I'm going to just jump in then and reply a little bit. So first of all, look, here's the thing. The vote, this idea that, oh, but we're not diluting the vote does not matter, because what we want to vote on, if you are an Ape shareholder, is conversion. That's what you want to vote on. Now, whether or not the condition exists to prevent a hostile takeover doesn't matter. The point is that it exists. And because the condition exists, that it is up to the AMC board, who has a fiduciary obligation to the AMC shareholders, not to Ape shareholders, the AMC board would be moronic to accept the dilution of Ape. And this is why when Ape goes to worthless, whatever number that might be, in the event that it does, then AMC absolutely wouldn't take over that dilution, because they would be hurting AMC shareholders. Now, this argument that, oh, but hey, they can't even do the $5 billion. They've only authorized $1 billion. This is true. In fact, I can read you the exact line. It says, the AMC board currently has no plan or intention in calendar years 2022 or 3 to authorize more than this initial $1 billion amount. However, the AMC board of directors may authorize additional units at any time at its sole discretion, including a 2022 or a 2023, if it deems as such an issuance in AMC's best interests. So in other words, they can do whatever they want. So they have complete control over Ape. Ape is nothing more than a meme token they're using to try to get out of debt. They have two ways to get rid of this $5 billion. Rip off people buying the stupid Ape stock, which is absolutely dumb to be buying. I'm sorry, I'm just being blunt. That's what I feel. Unless somebody can give me facts as to why this is wrong, then that's fine. I'll gladly look at them, and I've been doing that all day long. Then I believe that.
Well, I don't think anyone can, really quick, Kevin, I don't think anyone can give you facts until we see price action, right? So if it runs to 20 tomorrow, then we'll give you the fact that you were wrong, because people could have, quadrupled their money, right?
No, but here's the thing. Price action is different from fundamental. I would love for Ape to run to 20 tomorrow, because what's going to happen is Adam Aron is going to do the smart thing and issue those 500 million shares, and they'll probably authorize even more and issue those, and they will rob whoever is quote unquote diamond handing Ape. They're literally going to take money from whoever's buying Ape, is
Kevin,
going to go pay down the debt. That's all they're doing.
How long does it take to approve?
So here's my question: is there a demand for institutions and short sellers to have Ape on their books?
Oh gosh, absolutely. I mean, if I could short Ape, I would short it. It's a scam. You shouldn't touch Ape. If you are an Ape, you should buy AMC, not Ape. Ape is literally preying on retail investors, assuming they're stupid.
I'm sorry, I've got to say something here. Look, the whole messed up thing behind this is they put that FUD out before Ape dropped. Nobody in their right mind is going to sell Ape when it drops, because we're all sitting here waiting to see the shorts get discovered. Okay.
I mean, here's the thing. Even if it comes out tomorrow that Ape is 20% short, it doesn't matter if people find out that it's basically a bad investment. That
so what's the point of selling
fundamental? Because it'll go down. The shorts will win.
What's the point of selling it?
Well, the point of selling is the thing's going to go down. I mean, there's no fundamental under Ape. The only way Ape has value is if the board proposes it.
Hold on, guys. You guys, stop interrupting each other. Like, just let people finish their sentences. What I would say is, say you're telling people it's dumb to buy Ape and you should go on AMC. What happens 3 months from now when the board's like, oh, hey, by the way, we want to convert all the Ape that we've put out into the market so far, and you were buying Ape at $6 instead of AMC at 10?
Well, then it depends on the conversion price, right? If you have a one-to-one conversion, then what you're referring to is an arbitrage. And the reason you're seeing that arbitrage difference right now, the reason one's trading for 6 and one is trading for 10, is because of the uncertainty that the board has literally no obligation to actually authorize or even propose that vote. They don't have to do that. And
There,
so, yes, that could happen. And in that case, best case scenario. But you have to remember you're taking on a massive amount of risk.
it's like arbitrage, but let's be honest. It is definitely not arbitrage. You cannot have arbitrage in two different tickers.
Well, sure you can, because you're playing the fact
No,
that
you
one is going
can't.
to convert into the other.
No, arbitrage is about me taking one security and going somewhere else because I know that security is worth more. And
Well,
so
okay.
if I have an AMC and I go buy an Ape, that is not arbitrage. They're not the same.
Okay.
Apparent by today's charts.
I mean, to me, this is now where we're arguing about semantics. I mean, maybe you're right, but here's where I disagree. Look, if I buy Activision Blizzard at $50 because I think it's going to be acquired for $94, there's an arbitrage there. The difference is the risk, right? If it's trading for $50, that means the market is saying this is risky. It might not actually go through at $94. It's the same thing as buying Twitter at $39. It might not go through at $54.20. It's the same thing as why people are buying Ape. People are buying Ape because they think it will be worth one share of AMC, which today trades higher. That's my definition of arbitrage. We're on the same page in terms of what's going on, I believe. If you have a different definition, that's fine. That's not the point.
Well, I mean, there's only one definition.
Okay. Listen.
You're taking the same security and you're selling it. It could be the same product or anything. In this case, Ape is not AMC, even though they're worth the same.
Okay, so I do feel like you completely ignored what I just stated instead came back at me with your definition again. I'm not here to argue about this kind of nonsense. I'm here to provide
no, you were giving an opinion about
you're interrupting me again.
And there's
I will
only
leave.
one definition.
If you interrupt me again, I'm going to leave. Okay, listen, I'm not here to upset anyone. I'm here to provide a red flag. If you go to the FAQ, it's very simple. You could go to FAQ number 7. How many AMC preferred equity units are there? And if you go to FAQ number 3, you will see exactly what the board condition is. If you believe that the board will actually authorize the convertibility, then great, buy Ape. If you think there's too much risk that convertibility won't happen, well, then don't buy Ape, just buy AMC. But here's the thing. AMC fell for 2 reasons today. One, the smaller one, potentially the Cineworld bankruptcy. Okay, big deal. But number 2, the market actually believes that AMC was diluted. It wasn't. And that's the beautiful thing here, because when Ape potentially goes to $1 or to 0 or whatever, and it never actually dilutes AMC, you have a potential catalyst for AMC to actually jump right back to 20 and beyond.
Okay, Kevin, there's a problem with your argument, though. I mean, there's a lot of problems, but I said something before, and you said that it didn't matter. But now you're creating an argument where it matters very much. You're saying, maybe I am dumb, because I'll admit that I don't understand everything that you're saying. But I did understand one thing that you said for sure, and it's that you seem to imply that there's a desire for convertibility in Ape. Is that not correct?
Oh, absolutely, because that is what you own. If you don't own that potential right of AMC, then you have nothing.
Thank you. I just want to make sure I have that clear before I proceed. So that's where the problem is. When I was speaking about the condition where it requires the board to approve convertibility, there's a case in which you do not want conversion. Like I was saying, if Ape and Ape only goes to the moon, right? Say it goes to $1,000 per share, all of the Ape shareholders dump their Ape on the market makers and hedge funds, leaving them holding the bag, right? So now all the Ape shareholders are the market makers and hedge funds that have been trying to destroy AMC. The Apes, we're free. We made our money. We're done. AMC does not want those hedge funds and shorts to be able to convert that Ape equity back into AMC and then vote the board out, which is why the board has to have that condition in place. It matters very much in that case. And then in the other case, convertibility is not a problem because the shareholder base is mostly us, and we're not going to vote in a bad way for AMC. So in either case that can play out, that rule is good for AMC, and the convertibility exists if they need it, and it does not exist if they do not need it.
Here's here's another scenario I want you to kind of mull over, Kevin, if you got a minute when you're off or whatever. Say they issue Ape, they pay off a bunch of stock, we're diluted. The board does vote to convert Ape into common stock. Now the debt's paid off. The common stock is back. AMC rolls into 2023 with a good movie lineup, the new branded credit card, the retail popcorn. So now they're debt free, pulling another, say, $1.5 billion in. And Adam Aaron goes, oh, you know what? Let's buy back some common stock.
In that scenario, if they raise money successfully and they make AMC better, why in the world would you ever want to dilute it? It doesn't, it just business wise, it does not make sense to literally ever bring Ape back in. You want
really quick. I wanted to ask Meet Kevin if he thinks it's bizarre then and dumb or idiotic that an insider actually bought several shares of Ape today. I think 25,000 shares of Ape today as well. An AMC insider. And really quick before you answer that, if you see Laid Back requesting, I can't see requests still. Spence, I would like to have him up. He would like to add to the conversation here, so I can't see him. But Kevin, sure. if you don't mind responding to, the fact that an insider did buy Ape today, I would appreciate it.
So I wrote down these questions. I'm going to go through these, and then I have to run after I answer these because I have a date night in 4 minutes, and I still have to shower. But I'll hurry. Okay, so number one. So first of all, say Ape goes to 1,000. Okay, so first of all, I don't think you are, but anybody who thinks Ape is going to 1,000 is smoking crack. Because here's the reality: at $15, this thing starts getting diluted immediately because that's what AMC wants to do. AMC wants to dilute this to raise cash and pay off the debt. That brings up the second question that came up. What if, as Spence says, what if this goes successfully? Great, then wonderful. AMC pays off its debt and then it can actually start paying dividends. Now, Matt has a good point. Why would they bring in the dilution? They don't have to. But even if they do, out of goodwill, hey, now they're debt free and they have no chance of bankruptcy. The thing's in a much better place. So either way, it's just win, win, win all around if it goes well. So you actually do want Ape to go up and you do want the dilution to happen because it's good ultimately for AMC. The problem is you've got this huge risk to the downside. And so now this question about what about this $175,000 I just did some quick math, somewhere around $175,000 potential purchase from an Ape insider. So I don't know. I don't know who bought it or what the transaction details are or whatever. But here's the thing. If I'm on the board of AMC, I'm thinking to myself, all right, we got to sell it. We got to make it feel like we are the retail cheerleaders. Send Adam Aaron out there and make sure he's pounding his fist about how terrible it is we're getting halted on Ape and on AMC. Make sure to go make everybody feel like we're out there for retail because that's going to get them to buy Ape. And then as soon as Ape gets any kind of stability in the market, we're going to start dumping shares and paying off our debt because that's our duty to not just our shareholders at AMC, but you have to remember, they employ over 30,000 people. 30,000 people rely on AMC for their livelihood. It is their duty not to go bankrupt. And so I think that's what's happening here. Is this is a big kind of marketing pitch right here. And quite frankly, they could get away with it. And I think it's great for AMC. That's why I'm not touching it.
Kevin, I would really appreciate it. I know you got to run and I know you have a date night, so I don't want to hold you up, but I appreciate you coming in and having a live commentary like this. It's really commendable. Especially if, you consider yourself a politician, which I think you're a YouTuber first, but most politicians don't do live conversations like this and put themselves on the spot. So I just want to say I appreciate it. I value your time. And if you want to come back when you have more time and answer people's questions, I know there's like 30 requests and I can't even see them on my end, but I know people have a lot of things to ask and discuss with you. Sure. So you're always welcome to come back on and we can hopefully do this again.
Well, thank you so much. And yeah, I don't consider myself a politician. I ran as not a politician. Honestly, I hate politics and running.
That's why I voted for you, because you're not a politician.